Welcome back to Made Simple. Today we're going to be talking a little bit about when you should sell your stocks. But before we begin, please subscribe, smash that like button. I would really appreciate that. Please and thank you. So today we're going to talk about 3 kind of tips or principles or rules that you can kind of follow or assess to know when you should really sell your stocks. Because I know that I've had this question so many times in certain investments or stocks that I've had. When should I sell out? When is a good time? I don't want to be too greedy, but I also don't want to lose money. When should I do that? So these 3 tips are really going to help guide you to know when you should sell your stocks. But as a disclaimer, I am not a financial advisor, so this should not be taken as financial advice, but rather for entertainment purposes only. Alright, now that we got that out of the way, let's talk about number 1. Sell when your price goal is reached. We're going to be talking about long-term or swing trades mostly. When you're long-term trading, generally you want to do your due diligence. And that is investigating into the stock, looking at financial reports, kind of looking at the overall projections of the company, just looking at the fundamentals, what the company does, and just putting that all into account to invest in a stock. And so when you're doing that due diligence, you generally want to put a price point. You want that stock to reach a certain price. And doing this when you invest in a stock helps you eliminate any risk and helps you realize those gains or those goals that you have. So let's say that I have $10 and I put it into a stock and it grows to, let's just say, doubles to $20, right? And that was my goal, was a 100% return. So then I would sell that, and that just helps you stay accountable to yourself and helps you avoid being greedy, which I think is the number 1 downfall of most stock investors or traders on the market out there, is that people are just too greedy and they want more and more and more, but they don't realize those gains or those profits when they've reached that goal. So putting goals is a great way to eliminate risk and allow you to have a more sound investment. All right, so rule number 2 or tip number 2 is to sell your stocks if you need that money. An important rule to know, super important, remember this, you never lose in the stock market until you sell. I talked about how greed is kind of one of those big things people lose out in the stock market, but I think another reason is because people are scared. They're fearful. They don't do their due diligence before investing in a stock, and when it starts to go down, they panic and they sell. All right? And that is not a good way to grow your money through stocks, because the stock market is all over the place. So you never lose until you sell. So say I buy again that $10 stock and it drops to $5. A lot of people will get scared and they'll sell out. They'll lose $5. But that would be a perfect time to invest more money. And if I were to wait long term, maybe in a year or 2, that will go back up to $12. Then I'm rather than losing $5, I'm gaining $2 off that initial $10 investment. And obviously this is put into super simple terms, low quantity of money, but it also reifies the point that you don't need to sell those stocks until you need that money. Let's say that you lost your job and you've had trouble finding a job, but you have a couple grand in the stock market. Well, you might need to take that money out in order to pay for your expenses until you can recoup that income. So that comes in 2 parts. Needing that money comes in 2 parts. One for that kind of emergency fund like we mentioned. And number 2, you might need that when you retire. So obviously you don't want to just keep your money in stocks until you die. The point of that is to take that money out and use it for yourself. And maybe that's when you retire. And that kind of goes back to those goals we talked about, or maybe when you reach those goals. And the last principle that we're going to talk about today, or the tip we're going to give, is number 3, which is buying that stock in the first place was a mistake. And what I mean by that is a lot of, you didn't do your due diligence. Say you invested in a company and, a week later, it turns out that the company was lying about its financials for years. So that stock is going to dip. you didn't do your due diligence beforehand. And so that's a very rare instance, but a very true one that's happened in the past. If you later realize a few weeks later after investing in a company that you don't like the fundamentals of that company, you don't think it's worth that much, you don't like the financials, you don't like what's going on in the news, maybe it would be a good time to sell it. It's better to realize and admit your faults early on than hold out hope until that thing drops to zero. All right, so those are the 3 tips I have for you today. If you liked them or if you have a question about them, please leave a comment, smash that like button, subscribe. Before we leave, just remember, take your emotions out of trading, do your due diligence, and remember that you never lose until you sell. And remember those 3 principles when trying to sell a stock. Do it when you reach your goals or you reach those gains that you put in advance. Number 2, take it out when you need it, if it's an emergency or if it's retirement. And number 3, if it wasn't a good investment in the first place, take it. All right, thank you for watching and have a good rest of your day.